Hello, guys. This morning, just before the we get to the New Year session that is going to happen at 1:30, I'm actually, making this video from Nigeria for those of you who might be outside the country. So, it is currently, some minutes to 10 a.m. Nigerian time. And I just quickly want to make this video just to help your patience level, right? If you recall in the course of the week, I actually told you guys that I'm a bit skeptical about just taking a sell trade aggressively. Why? The reason is very simple. If you look at the zone, the rectangular zone that I just marked, right? I am just trying to show you that liquidity is simply sitting all around this place. And the smart money are in the business of creating liquidity, inducing retail traders to get into a early sell or a early buy, and then they probably just take your money. But if you understand price action very well, you can, despite all of these, you can actually still look for trades in lower time frame by just looking at how time frames are correlated. So I am going to just show you in this video the correlation between the 4 hour time frame and the 15 minutes time frame. So I am going to use this price action that actually happened on Friday. Now, the first thing I want to let you know is that you see these two 4 hour candle that you see here, this blue and this purple, according to my chart, is a very important candle. I mean, are very important candles, and this candle is really simply telling me something. So I'm going to remove this liquidity area first, and I'm just going to be focusing you guys on these two candles right now. Let me quickly show you something, right? So let us say that this is a 4 hour, candle, right? Sorry, this is a 4 hour chart, and price is moving like this, and price did something like this, and probably had a failure swing and then go to the downside, right? Now, so guys, pardon me, let me do this again. So what I was just trying to say is that if you see, even let's assume that this is a 4 hour chart and this is what you're seeing by, break structure, pull back, and maybe at some point price broke structure, but made a failure swing, could not go back. This is where you have your mitigation block, or bearish or bullish mitigation block, right? But in this scenario, it's going to be a bearish mitigation block, right? And then what you would expect is that price will sometime come back to around this area, mitigate this area, and then die, right? Okay. Or price may not even get to that area because there is already a bearish mitigation block. So either way, any of these two scenarios can happen. So as a trader, you probably want to take a risk around this, and putting your stop loss just above this place with your entry here, and, join the trend. And if you see that price is coming back and there is a break above this point, you probably want to make use of this point and probably just sell to this point, in the first instance, because you don't want to assume that price will continue to go downward until you get a confirmation with a close. And at that time, the confirmation will be that there is already a change of character right about here. All right. That is, price actually took out the previous low, and then price has the tendency to continue, downward, right? To continue downward by coming back to retest this zone and then take out the previous low, which is, actually around here. All right. That is simply how to trade. You must actually know the way price deliver. Now, one thing I've learned in my trading life is that anytime price actually, make a downward trend or an upward trend, but in this case, a downward trend, price always have a way of coming back to close all the imbalances that was created at least before coming down. So your job is not to just assume that price will just come and close the imbalance. So you have to see how price will react to this area to see if price will close above or if price will just sweep, and you have to wait for a confirmation. And what is that confirmation? The confirmation is that you really have to see a change of character. And then after the change of character, you have to look up and see what is the reference point you are going to use to actually get into a trade, right? And you cannot take a trade. Why? Because price has actually given you a clue here with a change of character. If you don't see that change of character and you get into a trade, right, you are likely going to be gambling with your money. And this is what I try to teach with patience. So I'm going to come back to this. Let me just clear the charts, right? So I'm going to come back to this price action and show you how you can be patient as a trader. So what you can do as a trader is not to bother about anything that price is doing, whether price is going to go down or not. All you are aware of is that price is going to go at some point to mitigate this area. Now, there is something I probably just quickly want to show you again before I continue so that you can understand what I'm saying. Let's say price, is moving like this, made the high and made the low, and then could not go back, to, take this low out. So, and price comes around to break structure, right? Now, one thing you need to understand is that in a bullish scenario, right? When price got to this point, right? Price is definitely in 15 minutes will definitely be counter trading to the downside, and look for a reference point. And immediately you see in 15 minutes that there is a change of character. What do I mean by a change of character? You see that the 15-minute candle has actually taken out the high that created the last low and broke structure. Right? Then you know that there is a change of character, right? And price is about to actually start moving in the upward direction in 4 hours. So what you see here, that I'm just painting here is the 15-minute candle. And what you see here is the 4-hour candle. That is the correlation. So in a downward scenario, this is what you probably see. So if price comes here and does this and then broke structure, if you go down to the 15-minute time frame, you will see that this pullback in 15 minutes will be making higher highs and higher lows, higher highs and higher lows until it gets back to this 4-hour area, and then you can look for a reference point. And once price gets back to this 4-hour area, you know that price wants to actually come and take out the previous low, which is around here. So what you do as a trader is that you go down to 15 minutes, and what you will then do when you get to 15 minutes is to actually look at the 15 minutes price action, and then you identify the same area, or you look at the higher time frame area of interest, and then you wait for something like this, guys. I always preach this. You must get confirmation. You must see price in 15 minutes do something like this, like this, like this. Sometimes the moment you see that in 15 minutes price has already changed character, right? That is your confirmation that price is going to continue downward and take out the previous low of the 4-hour. So what you then do is that you look out for external reference points such as order flow or fair value gap, like I always show you guys. And then once you see that fair value gap, you can use that as a reference point, and then you can decide to take your trade, because in 15 minutes your risk is lower, right? So you can then decide to short either from the fair value gap or from the order block. If you are a conservative trader, you want to short from the order block. And what you want to do is you want to take your trade and take your exit at the previous low, even though you are aware that price is likely to, once that is done, even though you know that price is likely to just, take out the previous low and make another low just to confirm that the downtrend. But you don't want to leave money in the on the table. All you want to do is to at least, you are almost very certain that price, is likely to come and take out the previous low that was created because you have already confirmed bearish. So let's come back to this and just let's see how price will play out or what price is doing. Let me just mark this area. Let me just mark this area gray. All right. So that we can see what we are talking about. So this is gray. So let's now go down to 15 minutes. Let me make this gray clear a little. So let's now go down to 15 minutes. Let me reduce the thickness of this bread candle. Right. So let's now go down to 15 minutes and describe what I've just said, right? So if I go back to the 15 minute candle, right, or chart, that 4 hour candle, this is what you see. So what would you do as a trader? The first thing you would do is to look at what was the previous high that was made in 15 minutes, right? Or the highest point, right? Or you can even go to 4 hours and mark out the area that price actually rejected, right? So let's quickly go back to the 4 hour candle and see. You can see that this is the highest high that price actually made in 4 hours, right? And ever since this high was made, right, nothing has really happened. Price has not gotten anywhere close to that side. But this 4 hour candle, this blue and this red, and this purple is what you want to see how price actually deliver and the kind of price action, what you are likely to see is that when price was coming down in 15 minutes, you'll probably be seeing some lower lows and lower highs in 15 minutes. That is how price usually deliver. So you want to go and use the reference point within. This is what I'm just trying to say. Price will probably just be doing something like this, and probably something like this, right? So what you want to then do is for you to take advantage of this trade is to look for an institutional reference point right within this area in 15 minutes, not in 4 hours, because the 4 hour time frame and the 15 minutes time frame would correlate in this manner. So you want to come to this area and probably look for a trade. All right. So you want to say, okay, you know what? Let me look at the liquidity that was grabbed in 4 hours and what was taken out. And then you want to say, okay, you know what? I want to be very conservative. Let me actually take a trade from that place, right? But you also want to be very sure. It's not enough. You want to see if there is a huge correlation. So let me mark this particular one red. So that is the area of interest. This is our point of interest in 4 hours. But we want to see whether we will see a reference point within this our point of interest in 15 minutes, to use as, our reference point to sell. So that is how you look at time frame correlation. All right. So what you then do is that you go down to 15 minutes and you want to see how price actually came down all the way. So as you can see in the 15 minutes time frame, there is an order block and you can see it is very perfect. So if I were you, I'll probably just look at a point here and probably take around here just at this point. I probably just want to take my trade. I can use, price. There's something called psychological level. So I probably want to take my trade in this zone, right? In 15 minutes, right? And this is what I want to look out for. So I want to see price come back to this area. I don't want to care. That's how you need patience. I don't want to care how far price wants to get to. But you see, this imbalance needs to be closed, right? And you can see there is still room for price to come to this area. So you might want to take a psychological level and enter a trade in this particular area. And what would you then do? You then take your short position and you might want to say, okay, let me round it up to 29. And then you might want to do 2529 as your entry. you want to do 2529 as your entry, because 2529 is also a psychological level. Then once you do that, you probably want to decide, okay, because it is good, you want to give your trade some room to breathe, and then you probably just want to take some 80 pips, right? And then where would you target? You want to target the low that was created. This is simply how to take signal on your own. So guys, you want to see how price will deliver, right? So you might want to expand it to, let's say, today's date, and see whether price will pick your entry in 15 minutes. Don't forget our entry is 529. Let me just adjust it. So you don't want to take your trade, right? But mind you guys, you can just easily take 40 pips or 30 pips or 25 pips and leave the market, right? Because you don't own the market. You can just decide, sometimes long trade, when you stay too long in the market, anything can happen, but we are sure that price will react with about 50, 60 to 70, or even sometimes, especially with gold, up to about 100 pips. And that is what you want to do. Guys, you don't want to leave money on the table. So what I'm trying to do here is to make sure that my entry is speaking to today's date. All right. Because I know price would deliver to this area, and let us see. And then you can decide to say, you know what? I just want to take 50 pips from the market, right? Right. Price is likely to come here. But because it's a news day, I don't want you to just leave money on the table. So what you probably just do, you just measure, let's say from your entry, right? You measure 50 pips. And then you can also even use a reference point to do that. And you say, okay, as soon as price gives me up to, this is about 60 pips or thereabouts, right? You want to exit the market. All right. So you can just mark this area and say, I want to exit the market, or I want to take my trade to break even. That means I have to move my stop loss into profit. But for now, you leave it this way. So moving your stop loss into profit means you want to take advantage of the market. So if the market, goes against you, you are not going to lose any part of your capital. You are even probably going to actually make sure that you get enough to actually take off the broker's commission, and sometimes the spread, so that you are even and you are not losing anything. So let's see how price delivered in 15 minutes. I'm going to make this very fast, so let's see. So you're not bothered about what is good. Even if price wants to go as low as 2,000, it's none of your business. But you already know that particular what's it called? That particular gap that was created on Friday is definitely going to get close. And let's see whether price is going to tag us in. And let's see whether price is going to tag us in this trade at some point. I want to expand it. And you can see price actually tagged us in right here. And if you look at what price actually did after tagging us in, it actually gave us, let's see, it gave us up to about 75 pips, guys. That's okay. This is how you can easily get up to 40 to 50 pips. I demonstrated that. I showed you my result the last time. You can just take your 50 pips and go to sleep and just wait for another trade, right? And if you feel you don't want to take your 50 pips, you move your stop loss into profit below your entry, and you allow the rest of the trade to run. Worst case scenario, price will probably just come and take you out. But at that time, it will take you out when you have already moved your stop loss into profit. This is how to trade, risk-free. And guys, if you try what I am telling you, if you try this level of patience, and then look at how many days it took, right? How many days it took for price to get here, right? It took almost like 4 trading days or 3 trading days, because Monday, Tuesday, Wednesday, today is Wednesday. Let's just say about 2.5 trading days. But what happened? Price eventually closed. This is the point I'm trying to tell you guys. Price eventually closed that gap, which is from here to here, right? That price created. Price actually closed this by making this move, guy. If you take time to understand what I'm telling you, and you practice and practice and practice, you always win. And after price did that, see what happened. It gave us the 70 pips. We can decide to just this is how you would trade without emotion, guys. So let's go back to 4-hour candle and see, and let me just demonstrate to you that price will always cover those gaps. Now, if you look at when price made this high, right here, when price made this high right here, right, it still came back, up to this point. It got to this point, but price still came back and closed it. Can you see? Closed it. So if you have this understanding, you can always wait until price or counter trade. If you understand what counter trading, you can see it still came back, and then you can also see price still came back and closed the same, low. And you can see price has been making, moving in a range, and creating a high and closing it. And you see, so guys, for you to then confirm full bearish, then you must see price close below this range area. For you to confirm, full to confirm bullish, then price needs to close above this area. But for now, price is still in a range, right? This is how you can take advantage of range, in lower time frame. You don't do it in higher time frame. You have to go and look at how the lower time frame actually correlates with the higher time frame. And I can tell you this is how the 15 minutes perfectly correlates with the 4 hours. And guys, try this on any pair and you always win. If you feel this video has really blessed you, I want to get a thumbs up. And I want to share this video with as many people as possible and encourage them to join our community. Take care and be patient and wait for your trade to actually materialize. Bye for now.